Welcome back to Investors Hangout, your weekly guide to making smarter financial decisions. This series is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. So today, let's break down a topic that confuses even seasoned investors: multi-asset funds or aggressive hybrid funds. Which one should you choose and why? While on paper they might seem similar, but if you look deeper, the philosophies of the two are very different. So let's understand the nuances with our in-house expert Dhirendra Kumar. Welcome, Dhirendra.
Thank you.
So let's begin with multi-asset funds. How would you define them?
These multi-asset funds are like a balanced diet. You have carb, you have protein, you have vitamins, you have fat, all in one. It's a long-term vehicle. But for most investors, it's very scary being able to ride tide over the turbulent phase of the market. And here the fund manager has great flexibility to switch to asset classes within this, whether it be equity, debt, cash, or gold. 4 asset classes in a single fund, and he has complete freedom to allocate which is the most opportune thing. And he tries to, the whole focus is to optimize return, reduce the volatility, risk. Because most new investors, it is not that, they are scared of the turbulence in the market. They simply are not used to it. Because most investors start investing in good times. And the moment you are faced with the first decline, they get scared to the point where they bail out and swear never to come back again. Because market declines are much sharper than the steady market rise which we see over a period of time.
Right. That was multi-asset funds. Coming to aggressive hybrid funds, what makes them aggressive?
They are almost like equity fund. Think of it like a car, and with lot of airbags. Here is a fund which 25% is not into equity, 25% into fixed income, and there is no dynamism here. It is a disciplined approach of 75-25 equity debt. So what happens is market goes up, equity goes more than 75%, it gets reduced. Market goes down, fixed income lower than 25%, automatic rebalancing. It gives you a steadier experience of equity. It is not this dynamic in multi-asset funds where there is a greater diversification of asset, greater flexibility. This is actually a disciplined equity call and a steadier one.
Okay, so how do their risk return profiles compare?
Very different. When the markets fall, the aggressive hybrid fund is 75% equity. That is the time when a great multi-cap, a fund manager running this multi-asset fund who can actually demonstrate brilliance can be out of equity. Yeah. He has the flexibility, he has the choice. And if somebody is able to anticipate, I think that it is a very difficult thing to do. But still, if somebody is able to do, then he can actually escape that. But generally spreading over these asset classes, greater flexibility, not necessarily having 75% into equity, that itself has provided a steadier experience with multi-cap funds. So I would say that it's a compromise of 1.5% in terms of return, and far lower volatility when we measure it statistically in terms of standard deviation. Right. For multi-asset fund, they turn out to be far more steadier, and 1.5% compromise. So similar objectives, both long-term vehicle, and multi-asset fund will give you a more steady experience.
Okay.
They'll not scare you out.
Right. So how does an investor choose between the two? How do I know which one is better suited to my needs?
If you're a very new investor, in thinking of investing for 2-3 years, and then maybe that period will get elongated because you don't have immediate plans, consider a multi-asset fund. If you're a long-term investor and relatively new investor, but you're sure of your time frame, that I'm unlikely to need my money for 5, 7, 10 years, get started with aggressive hybrid fund. I believe in this disciplined approach to investing, rebalancing. Markets will remain the way they are. At the same time, a steadier vehicle which will not scare you out of the market, that is the most important thing, because most investors don't lose out because equities are risky. They lose out because they are unable to absorb the extreme gyrations of equity.
So in any circumstances, would you recommend a combination of these two?
No, keep it simple. New investor, less than 5 years, start with multi-asset. You have experienced equity. You are sure that 5-10 years you are unlikely to need the money. Start with aggressive hybrid fund, keeping it simple and understanding what it is, because most of the risk comes from not knowing where you are invested and why it is behaving the way it does.
Right. What about how would you compare them in terms of cost and taxation?
Aggressive hybrid funds from a taxation point of view are always treated as equity fund, because the definition of an equity fund is 65% and more into equity based on an average AUM, and that is what they're supposed to be. The category is defined that more 75% and more in equity at all times. If these multi-asset funds maintain over 65% allocation to equity, then they're treated as equity funds. So you never know.
Yes.
But if the fund manager decides that he has to keep it much lower than 65%, and that turns out to be lower than 65%, then many of these funds are actually trying to make it technically almost like an equity fund by putting money into arbitrage positions to make it look like equity fund. From a taxation angle, they are treated as equity, but by characters, it is more into fixed income and cash and things like that. So both of them are treated, one can safely assume that, both of them are treated as equity fund. On the expenses, the same expense as equity fund, but there is a difference. As this aggressive hybrid fund, it's a very old category. It's a very established category. It has existed for 20 years in different form, balanced fund, and they evolved into this aggressive hybrid fund. They have turned much bigger. And when a fund gets bigger, the expenses comes down. That is how the law is. Right. They are treated as equity. They are eligible to charge as equity fund. And the multi-asset funds are relatively new, smaller. So they're proving to be more expensive compared to aggressive hybrid fund. But that may not be the case in times to come, because that is also a very mainstream category. First time investors will be investing in those funds, and when they turn big, they will also be charging about the same.
All right, then, which one suits you best, aggressive hybrid or multi-asset? Share with us in the comment section. Now, moving on to the viewer's question. This person says he has an ongoing SIP in an aggressive hybrid fund to accumulate funds required in July 2028. The SIP amount was fixed, assuming conservative CAGR of 10%, and the accumulated amount was to be transferred to fixed income starting July 2026. However, due to higher return and additional contribution, the required amount has been accumulated as on today, and in spite of ongoing correction and continued SIP with current fund, NAV still below September 2024 highs. So should he start withdrawing the amount now, or should he wait for one more year as decided previously?
Stick to your plan. But before that, think of two things. One is that how negotiable is this goal? It is not negotiable, then you need to, which means that it's an important non-negotiable goal and you should be very firm about it. Now, there are two ways of going about it. One is to start withdrawing periodically, assuming the market doesn't go down by 20%. His investments go down by 20%. Will his goal be met? If his goal will be met, which means that he can take a chance, because most investments is, at the end of it, is all about meeting your goal. If that goal will still be met, fine. But if it will not be met, the way you had a methodical accumulation plan, have a methodical withdrawal plan. Start doing it for 18 months. So you will not have a wholesale regret if the market goes down. And at the same time, you'll be able to ride it till you can.
All right then, well, that's all we have for you in today's episode. Keep watching this space for more information. If you like the show, do subscribe to our YouTube channel. Thanks for watching. Bye for now.